This video we analyse the most profitable strategy generated by the code that is described in the previous video entitled 3138 Profitable Trading Strategies. As per the previous video, we can once again see a combination of long and short SMA cumulative returns generated for the Euro USD pair on the 4-hour time frame from March 2020 to April 2023. As can be seen, the best performing strategy was the one that had the short moving average of 110 and the long moving average of 370. The highlighted values of which can be seen here, giving cumulative returns of 1.247. Here we can see a real-time breakdown of the strategy. Once again, the blue graph shows that from April 2020 up until March 2023, the gains from this method were relatively consistent. There were some drawdown periods, but nothing too extreme. These screenshots show the real-time results throughout this 3-year period. As you can see, once again, we have conditionally formatted the values such that the lowest returns are in red and the highest returns are in green. This basically gives us a more detailed view of the blue graph previously seen. The rising trend is evident from colours gradually turning from red to green in a consistent way. If this was an inconsistent, wildly oscillating strategy in terms of return, then we would see regions of green followed by regions of red or amber, which would imply the strategy is quite inconsistent. But as evidenced here, it is a consistent, profitable strategy. We once again use the matplotlib library in Python to visually understand what has been going on in a more efficient way. Here we can see that there have been 6 trades over the period of 3 years. This is easily quantifiable just by counting the number of green triangles, as opposed to the previous strategy, which consisted of a very short SMA and a very large long SMA. This method employs a relatively large short SMA and a large SMA. This is the reason for the far less frequent trades. You can see from this graph that these trades are generally executed when the currency pair is more trending, as the shorter SMA is 110, which is much bigger than the previous short SMA in the previous strategy of 10. This is why in periods of lower directionality, a larger number of trades are not executed and then closed in high frequency, which results in small drawdown. Here we can see the details of each executed trade. Once again, you can see there are 6 trades that were executed, 2 in 2020, 2 in 2021 and 2 in 2022. Going back to the matplotlib graph, we can see that the potential issue with this strategy could be due to overfitting. This means that this particular combination of short and long SMA could have been completely idealized to the volatility of this currency pair. While cycling through hundreds of combinations of short and long SMAs, it seems that this combination is perfectly suited to the volatility of the Euro USD 4-hour data for this time period. The question remains, would this trade strategy be as profitable if we choose a different time period on the same time frame for the same currency pair? This remains to be seen, and this must be taken into account when fully backtesting a trading strategy. This strategy did perform very well for the 3-year period shown, but would it, for example, have fared as well from the years 2017 to 2020 or from 2014 to 2017? Further backtests should be done to ascertain this. On the other hand, if the strategy has been performing well for the last 3 years, it may continue to do so. Please subscribe and follow for further analyses and trade strategy breakdowns.